Goldman and a few other brokers took numbers down on McDonald's after an analyst meeting. How do you feel about this? Is this just a foreign exchange thing?
Yes, okay, it is. And obviously, do people eat fewer, go to McDonald's less in Europe if they if things get hard times? That's not clear to me at all that they go less. Historically, people go more. Do their commodity costs go up in this environment? No, their commodity costs go down rather dramatically. So you have gross margin expansion. You're not going to see that much of a hit to sales. Again, I refer to 2008 in this country where we had the Great Recession and McDonald's did not get hit to sales. Okay, so we have that benchmark of what happens when the Dow goes from 14,000 to 6,500 and business in this country collapses. We did not see a cessation in McDonald's sales.
Right.
But McDonald's has been a very forward-looking company that realized that there's not enough growth in America, so they spent a huge amount of money going to Europe. Okay, now the dollar in Europe's big for them. So the translation is going to be bad for them. So people cut numbers. Now, does that mean you should sell McDonald's? I'm going to advocate a different strategy. If you own McDonald's, you sell half.
Okay.
Okay, till everybody cuts their numbers.
Okay.
And then you buy that half back. So and the reason I say this is because McDonald's yields a little more than 3.
Yep.
If I could get McDonald's at 4, I would be telling you to buy. So my reluctance in saying sell it all is because they don't come back and do a video and the stock will be yielding 4 and I'll say, I'll buy it. And people say, well, he told me to sell it because I'm really mindful from, Jim, I get enough feedback from Mad Money, from the street, from @Jim Cramer on Twitter. I'm really mindful that people do not understand the concept of selling and then buying. They just don't. They just think, he told me he didn't like it, and now he tells me he likes it.
Yeah.
Well, no. I like McDonald's. I want to get that yield at 4, so I don't want to
get a better price.
Right. I want a better price. Now, that's an alien concept for a lot of people, which is why the stock market is so difficult. Because if that's an alien concept, that means people haven't thought about it long enough. I want McDonald's for its yield. I want McDonald's for its long-term growth. Short-term growth is going to be hurt by the euro. I'm willing to let that be a reason why the stock comes lower so I can buy it. And if that's too complex, then people should be in treasuries. If it's too complex for you, that strategy, then treasuries are for you. And I'm not being condescending. I'm just saying that what I didn't think was complex to a next generation of people who follow the stock market seems too complex. I'm playing yield here. That's what I'm playing. I'm playing the yield curve and yield through a company called McDonald's. And McDonald's is really attractive at 4%, given the set of parameters we have right now. And that's how I look at it. I look at it as a fixed income security with some capital risk.
And it's not a broken company, not a broken story.
It's a fixed income security with some capital risk. Contrast that with Home Depot. Yield isn't great enough, but the financials are better, okay, because it doesn't have the European. So Home Depot is a little more attractive. But McDonald's at 4%, I think we're going to look back and say, if McDonald's at 4%, why didn't I own some? Okay?
Yeah.
And if McDonald's goes to 5%, I'll say, why didn't I just put my kids through college with McDonald's? Because that's what's going to happen.
So what price are you looking at for it to go down
4%.
to?
I'm
just
using,
the yield.
Remember,
You're
I'm
just
using
looking
this
at
as a
yield.
fixed income. So if I told you treasuries, you know what, when they yield 4%, buy them. Well, everyone would say, well, does that mean that he's saying buy them at 109? No. What he's saying is that there's a price for a fixed income, and it's 4%. And I'm saying that McDonald's, if you look at it as a fixed income security with some capital risk at 4%, it's just too compelling.
Okay,
Thank
great,
you.
thanks.
This market is
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to